Eisler Wealth Management, we used a 27-point financial checkup to grow and protect your wealth. You wouldn't do a cross-country road trip without checking with your mechanic to do a 27-point inspection on your automobile. So at Eisler Wealth Management, these 27 points, they fit into 6 different categories. Number 1, are you making good financial decisions with your money? Cash flow and lifestyle planning. Number 2, tax planning and optimization. Are you truly reducing your tax liability, state and federal, as best as possible? Number 3, debt and liability oversight. Don't be giving too much of your money to your debtors. Number 4, insurance and risk management. Are your finances being handled in a way that you can sleep easy at night? Number 5, retirement and government benefits. Are you getting the most from your Social Security and other benefits that the government owes you? And number 6, estate, legacy, and family planning. Is your assets being handled in a way that's going to go to your next generation seamlessly, smoothly, and the way that you had intended? Welcome to the Business Wealth Podcast. Today, we are going to be discussing the 27-point financial checkup to grow and protect your wealth. You wouldn't go on a long trip without having a mechanic do their 27-point inspection on your car. Neither should you begin your retirement journey without having your financial advisor do their 27-point checkup on your financial health and wealth. We have 6 sections. The first section is your cash flow and lifestyle. So the first point of the 27 is your cash inflows and outflows. Are your cash inflows really covering your lifestyle? Your financial advisor should be making sure your essential expenses are taken care of. There is a reason the airlines instruct passengers to put on their own mask first. Second, have a spending alignment check. Is your spending aligned with your values, your goals, your faith, and your season of life? If not, your financial advisor should help you to realign your finances to what truly matters. Number 3 is your upcoming large purchases and obligations. Whether you're saving for a large vacation coming up or a large vacation home, maybe a home project, medical needs, tuition, large repairs, anything that needs advanced planning, you should be discussing with your financial advisor to make sure there are no unexpected delays or surprises. And so your financial advisor should be mapping out the big ticket items so you can spend without financial stress. So the fourth and last point of cash flow and lifestyle planning is optimizing your savings. Are your contributions to your 401k, your Roth IRA, your HSA, your IRA, your 529 plan, your brokerage account? Are these all happening in the right amounts and in the right order? Are you optimizing the returns on each of these and your cash holdings? These are the 4 sections of your cash flow and lifestyle planning. The next section is tax planning and optimization. The 5th point of our 27-point plan is tax bracket analysis. That is, are you fully leveraging your current brackets? Are you avoiding bracket creep? Are you capitalizing on lower income years? Are you shifting income and deductions around high income or low income years? Point number 6, tax loss harvesting and gain harvesting. Loss harvesting strategies plus using the 0% capital gains bracket if available. The 7th point is looking for Roth conversion windows. Are the current brackets lower right now? Is the retirement timing a good opportunity, or is there a business income change that creates an opportunity for Roth conversion? The 8th point to check up, the tax location of your investments. This is huge. Are your equities in the brokerage or the Roth account? Are your alternative investments in the Roth or IRA account? And are your bonds in your IRA account? See, by making sure that your allocation is in the right accounts, because these assets are taxed at different rates, you will minimize the ongoing tax drag in your portfolio. The 9th point of your 27-point checkup should be your retirement account optimization. Consider a backdoor Roth, maybe a mega backdoor Roth. Consider using a SEP versus a solo 401k. Consider using a deductible IRA versus a Roth IRA. Optimization of your tax contributions is key. The 10th point is your charitable tax strategies. You should be considering, does a QCD make sense? Donor advised funds? Donated appreciated stock? What about charitable trusts? It's all about maximizing your impact and your deductions. The 11th point is your business and employer deductions. Consider health plans, reimbursable expenses, retirement plans, accountable plans. All of these strategies are tax-advantaged options that should be considered. Number 12 is tax efficient withdrawal. Yeah, maybe it goes without saying, you want to pay taxes at the lowest tax rate possible, but it does require some coordination. When are you going to pull out the money from your Roth, your IRA, your taxable accounts? Timing these can help to minimize your lifetime taxes. Remember, a widow will be in a higher tax bracket filing single than when they file jointly. Okay, now we're getting into the fourth section of our 27-point checkup. This is points 13 through 17, debt and liability oversight. The 13th point of the 27-point checkup is your debt. Debt payoff, refinancing review. Are there opportunities to lower the debt rate you're paying, to consolidate debt, or even eliminate unproductive debt? The 14th point is your mortgage and HELOC strategy. Maybe there's a refinance opportunity. Maybe you should be buying instead of renting or vice versa. Is there a HELOC planning window? The next part of the debt and liability oversight is number 15, student loans. Consider the Parent Plus program, the education tax credit. Are your loan strategies coordinated with the American Opportunity Tax Credit, the Lifetime Learning Credit, and the income phase-outs that are related to those? Number 16 is your portfolio allocation check. Does the equity, alternative, and bond mix in your portfolio match your ability, willingness, and need to take risk? Number 17, investment cost review. Are there any high expense funds or inefficient structures that are quietly eroding your returns? Section number 4 is points 18 through 21. You should be discussing with your financial advisor insurance and risk management. Point number 18 is your life insurance coverage review. Do you have the right amount, the right type? Are there any unnecessary premiums? Point number 19, disability insurance. Is your income protected if you cannot work? Point number 20, health insurance and tax credits. Are you considering your eligibility for an HSA? Are you considering premium tax credit opportunities? And really, what is your out-of-pocket max expenditure that you could be exposed to? Number 21, home, auto, and umbrella coverages. Are your deductibles, limits, and premiums really where they should be? So our fifth section is government benefits. Number 22, Social Security optimization. Is your claiming strategy aligned with your longevity and tax brackets? Number 23, Medicare or Medicare Advantage review. Are your prescriptions, doctors, and travel needs, are they all covered this year? The next and last section, points 24 through 27, is estate, legacy, and family planning. Point number 24, take a look at your wills, trusts, guardianships, your powers of attorney. Make sure these are updated, signed, and they align with your actual assets and your intentions. Point number 25, look at the estate tax exposure and what gifting strategies are there around that. Oregon's estate exclusion of $1 million affects a lot of my clients. That federal exemption, of course, is higher, but does lifetime gifting make sense? What about using a Cupid, a Grat, a Slat? Planning should start now if you're going to use one of these. Point number 26, your beneficiary review. These are the people that are going to get your assets. Have there been any life changes made by you or anyone in your family? This should be reviewed to make sure there are no outdated designations. Number 27, we're finally on our last one. Document and legacy storage. Are the key documents, letters, photos, passwords, and instructions stored and accessible to the people who will need them? Are your charitable donations leaving the impact on the world you imagine for generations to come? So this is the 27-point checklist. It's just an overview. You should be digging into each of these points with your financial advisor. If you'd like to do an overview with me, go ahead and book an appointment.